Some state policymakers think North Carolina should reinstate its state level earned income tax credit, or EITC. Not Joe Coletti. Joe is senior fellow in fiscal studies at the John Locke Foundation, and he recently shared concerns about the earned income tax credit at the state level in a blog at the Locker Room. Joe, why not bring back the EITC?
But probably we should start with what the EITC is, that it's a federal tax credit right now that is intended to encourage people to work, that it only applies if you have earned income, which is in the name, earned income tax credit. As a person who is claiming the credit earns more money, the amount of the credit increases, there's a plateau region, and then it phases out over time. It's all intended to encourage work and to encourage more work. The problem is that, and it's helpful. So it's helpful because it does encourage people to take work. If you're a married couple earning $3,000 a month, the tax credit is $3,600 for the year. That's more than a month's worth of work that you're earning, that you get from that. And so it accomplishes its goal at the federal level, but it's really complicated, and it's subject to abuse and to missed payments and things like that. And that's at the federal level, and at the state level, it's not going to provide that much money. It's about $183 for that same family, and you still have all the same problems that you do at the federal level. And so it's really not going to accomplish much at the state level, while it's still going to have all of the baggage that you have from the federal earned income tax credit.
In fact, I like the way that you describe it in the very first sentence of your blog post. You say a state EITC would inherit the costs of the federal program without adding to the benefits. You've already alluded to this, but let's go through several items that you list out as problems with the state level EITC. We'll just repeat the ones that you've already mentioned and perhaps go into a little more detail. First, complicated rules. This is not something that someone could just have one sheet of paper figure out. They have to go through all kinds of process just to figure out if they can get the EITC and how much it'll be.
Yeah, the instructions for it are multiple pages within the instruction book for your federal tax form. Then it has a number of pages of worksheets, and then it has about 8 pages of tables at $50 increments to figure out how much you actually get to claim. And then you have to go across in which column and say, all right, we're married, filing jointly, I'm single, I have one child, 2 children, 3 children or more, or no children. And there's a different amount at each level. And so being able to, and then figuring out who can actually claim the credit, because only one person can claim the credit. And so if you're in a multi-generation house, or if you are in a divorced family or something where there are 2 people with custody over a child, being able to sort all that out gets really hard to do. And so most people end up either going to a paid tax preparer or using an online form, because you just can't tell on your own how much you're supposed to be claiming or whether you can even claim it.
The second problem you list, I think, is related to the first, and that is that there are a lot of improper payments tied to this.
Yeah, because you can't figure out whether you can claim it or not. You have multiple claims for one child, and you have some people who aren't claiming who are completely eligible. And then some of the tax preparers, because the person coming in can't figure out whether they qualify or not. You also have some tax preparers, and this is the IRS says the greatest source is from tax preparers making fraudulent claims.
You also mentioned that the people who are involved in claiming the EITC are at much higher risk than others of getting audited.
Yeah, as a result of all the complications with it, and some bad behavior by tax preparers, it leads to questions about how much the person should be taking and whether they should be taking. And so it does make them much more vulnerable to an audit from the IRS.
EITC is designed to help those who are working, but you also mentioned that one of the perhaps downsides, or at least something that people ought to keep in mind, is that the people who are most inclined to go back to work because of EITC are mothers with really young children.
Right, and it's part of the design of the plan is to encourage single mothers to go to work, but that also leaves the people who are most likely to do that, the mothers who are most likely to do that, are those of young children, and that means that they then have to find some daycare for their child, and they're not there for the most formative years, and so it's part of the design of the plan, but it's also a drawback if what you're trying to encourage is families, right? So
The last item that you list in this blog post is lower incomes and higher tax rates. And it sounds as if the way that this program works out, it can be advantageous for some people to decide not to work more.
right, there's two sides to on the lower income. The one is that because you're willing to work for less, because you have at that $36,000 family income that I gave as at the starting as a starting example, was a $3,600 tax credit. You have folks who are willing to take less money from their employer, and so it provides a subsidy to companies to pay their workers less. And it also leads to less incentive. So there's a huge incentive to start work, but there's less incentive to take more hours or to take higher pay. And so and that's related to that as you move up in the to the upper ends of the earned income tax credit, you start losing the tax credit, that phase out phase. And that's where 3/4 of the people who get the tax credit are, is in the flat or in the phase out regions. And so they're paying they're paying really high marginal effective tax rates as they lose their benefits from the earned income tax credit and from other programs. And so that's that's part of why people are willing to take lower incomes, because they're going to lose about half of the money that they earn if they earn another dollar once they get into that region.
The entry at the John Locke Foundation's blog, The Locker Room, is titled "Why Not an Earned Income Tax Credit?" Its author is Joe Coletti. He is Senior Fellow in Fiscal Studies at the John Locke Foundation. Thanks so much, Joe.
Thank you, Mitch.